Hello and welcome to another episode of Ask NDB Wealth mid-month market update for the month of March. My name is Vihanga Jayasinghe and I'm here with Kavin Abesekara who will take you through GDP growth.
Thank you, Vihanga. On the 15th of March 2024, the Department of Census and Statistics released the national accounts estimates for the fourth quarter of 2023, which indicated a 4.5% year-on-year expansion and an overall 2.3% year-on-year contraction for the year ended 2023. All the three major components of GDP expanded in year-on-year terms, where agriculture, industry and services grew by 0.6%, 7.9% and 2.8% respectively during the quarter. Despite the gains in the fourth quarter of 2023, both industry and services contracted by negative 9.2% and negative 0.2% during the year ended 2023. However, agriculture expanded by 2.6% following the gradual ease of the fertilizer import ban. Moving to exchange, the Sri Lankan rupee appreciated by 1.48% against the US dollar in the first 2 weeks of March. The strong worker remittances and the recovery of earnings from tourism added support to the rupee. Despite the central bank engaging in net purchases of foreign exchange, the rupee showed strengthening signs following the influx of dollars into the market. The gross official reserves for February 2024 were at $4.52 billion, marginally up from $4.5 billion in January 2024. The equity markets continue to remain green, supported by the gradual recovery of the market earnings and expectations growth. The All-Share Price Index and the S&P SL 20 Index grew by 6.43% and 6.84% respectively during the first 2 weeks of March. Over to you, Vihanga.
Thank you, Kavin. So looking at private sector credit growth, there was a contraction of 0.7% month-on-month in January 2024 and a year-on-year contraction of 0.1%, amounting to a decrease of 52 billion rupees. This contraction can be attributed to the diminished demand for import credit and reduced consumption following VAT hikes, which contribute to a slowdown in the economy. In the fixed income markets, the initial fortnight of March saw a notable uptick in treasury bill rates across all three durations. Specifically, the benchmark 12-month treasury bill rate surged by 19 basis points to 10.24%, the 6-month rate rose by 26 basis points to 10.21%, and the 3-month rate climbed by 23 basis points to settle at 10.1%. Additionally, the central bank held a bond auction during the week, offering a substantial total of 275 billion in 3, 5 and 8-year bonds. The auction generated significant interest, with bids nearly doubling the total amount offered, reaching close to 530 billion rupees. The central bank successfully allocated the entire offered amount at weighted average yields of 11.3%, 12.25% and 12.42% across the 3, 5 and the 8-year tenors. Notably, the spillover effect from the unsuccessful investors did not necessarily manifest in the secondary markets, as investors played a wait-and-see approach focused on the forthcoming monetary policy review meeting scheduled for March 26.
Thank you for joining me with another episode of Ask NDB Wealth.